All right, stocks continued their post-expiration bounce today. A nice little move to the upside. So we're going to break down some of the really good bullish signs, early signs that we're starting to see that suggest that we can have a good continuation of this with a continued bullish move to the upside throughout the rest of the week and beyond. So there are some red flags, as there always are. So I'm going to point out some of the more significant red flags that we're seeing right now. Essentially some of the hurdles that we're going to have to clear, especially over the next couple of days. For us, we've got a big important couple of days, right? We've got big earnings announcements. Tesla already this evening. The PCE report on Friday. The PCE report on Friday is due. So there's a lot that's on the docket. So it's a significant week in terms of what can drive the market. And so the more solid this bullish move can be by the end of the week, the better for us to be able to continue on a new leg higher. There were some good signs today that that suggest that we are starting that new leg higher. Nice little runaway gap so far today. But we're missing a little bit of breadth. What's driving the market today? That bullishness we're kind of only had one thing driving that. I'm going to break that down. And then not quite the sector rotation. Today was great, but we're not seeing broadly the sector rotation that we want to see yet. So we'll break all that down in today's video with our trade idea in an area that's kind of more economic growth sensitive that kind of broke down. So we'll talk about how to trade that. So let's go ahead and get started. Today is Tuesday, April the 23rd, 2024. This is the Market Outlook from MarketScholars.com. My name is David Settle. Before we get going too far, I invite you to subscribe to our YouTube channel. This icon here, the red subscribe button down below. Click the thumbs up icon to like our video. Comment on anything that stood out to you today. Join our website on MarketScholars.com for free. Follow me on Twitter for more content between the videos. And join our Market Outlook Facebook group that we've created. Alright, if you're watching us here on our blog, check out some of these other things over here on the right, including a Market Outlook live video where I review all the old trades that we've done, see whether we should stay in them. We got out of one trade today in an old Market Outlook video and put on today's trade already before the market closed. Come down to the bottom, click this heart, it opens up this tab, hit that like button there. Same thing here. Click this thumbs up icon, it opens up that tab, hit that like button. Again, the more you do that, it helps get our content out to all of our followers on those platforms. It's a big deal to us, is why we always ask. Our goal is to get to 100 likes here on Twitter, so thank you to those who like these day in and day out. They get us close to that. Those who don't, you can do it right now while you're watching and help us get over that hump. All right, let's start off taking a look at the S&P 500 with the market forecast indicator. So you can see a nice little rally today, closing above the high of the low day, as well as basically closing above the highs of both of these cluster days. So nice little turnaround. Again, very similar to, you could argue, over here when we had these two cluster days, and we finally closed above the high of both of those days in that second day, and we continued higher. Now, of course, that doesn't always mean that we're going to immediately turn up, but it's a good sign. It's a good sign nonetheless. The short-term sentiment's much improved. The momentum line a little bit into the reversal zone. It would be nicer if it was higher, but at least we got there. Which means there's a good chance the near-term line gets there. Obviously, it would take a pretty big down day tomorrow to keep that near-term line from getting all the way up into the reversal zone. So a good chance we have a pretty good move here that could start us off on a new intermediate rally. Now, I don't think necessarily it'll be a 4-month-long intermediate rally like this one. The typical is 1 to 3, but still, regardless. We're less than 2.5% below the moving average again. We're working our way up to the upside, and we don't even have the bear tag yet, right? Remember, an intermediate run typically starts with a bear tag, so we're probably a day or two away from that happening. And that bear tag, like once we get the bear tag, we're going to be well below the intermediate line. Will be well below the market sentiment line, which is now between the reversal zones, so you have to get a crossover. So assuming that we get a bear tag in the next couple of days, and the intermediate line is still in bearish territory, so probably in this area here, but well below market sentiment, then we got, in the next day or two after that bear tag, we got to continue really bullish and get that intermediate line up above market sentiment. If we don't, then we are most likely going to fail on that bear tag, which generally means that we have a new leg lower to the downside. Now, I think the chances of that happening are lower. I think it's more likely that we'll get a bear tag like this in the next couple of days, and we'll take off to the upside. Again, we were above market sentiment there. We won't be here, but as long as we, again, in the first couple of days when you really kind of follow through and solidify that bear tag, as long as we get above it then, you can see, like, for example, in the next couple of days after that, the intermediate line was, in bullish territory at least. And so we would be pretty close to getting above that market sentiment line if that were to be the case. So that's actually kind of my expectation over the next rest of this week, is that we'll get closer to that scenario playing out. It might take 3 days to get that bear tag instead of just 2. If you look at the NASDAQ 100, you can see very similar pattern. Again, we got those 2 clusters. We have not closed above the high of both cluster days, right? So the first one, yes, but not that second one. Short-term sentiment's not as bullish yet. Market sentiment line's a little bit further down. So pretty similar. And the intermediate line's still pretty oversold there. The Dow Jones Industrial Average is a little bit less bullish too. The intermediate line is almost out of the reversal zone. Market sentiment line's lower. The near-term line did get up to the upper reversal zone, but just barely, without the momentum line. Again, we had 3 clusters here, and we have closed above now today the high of all 3 cluster days. So this high being that one. So a good reversal sign on the Dow. And then finally the Russell 2000, same thing, close above the high of all these cluster days. Near-term line dipping its toe. So in market sentiment a lot lower. So we are set up for, over the last couple of days, we are set up for a pretty decent rally in a lot of ways, but especially on the market forecast chart right now. All right, now let's take a look at some of these other indicators here, and you'll see kind of similar patterns. If you take a look at the weekly chart, again, we didn't get a lower low so far. We do have a lower close, but we don't have a lower low, so that's one positive sign that things may be turning higher. We haven't crossed above the moving average yet, but we're getting pretty close to doing that, and the PPO you can see is still falling. Obviously, we don't have 3 green arrows on the S&P and the NASDAQ. We do have 1 and almost 2 green arrows on the Dow, so we're pretty close to things kind of turning there, which is interesting because the Dow was the one that's been the most bearish. It's been light pink shading this whole time, 3 red arrows and a red line. So at least we have 1 green arrow. So far so good there. Remember, you have to get the 3 greens, and then which is what the bear tag will end up being, and then build on top of that. The S&P, you can see we're above the 8-day moving average. MACD, Stochastics has crossed its moving average. The MACD hasn't quite crossed its yet. You're still below the 17 days, so we still kind of need that to get going. Your Dow Jones Industrial Average, you can see, is above its 17-day moving average, so that's a positive sign as well for the markets. Looking at some of the other oscillators like the DMI indicator here, we are back below 30. We're not back below 25 yet, but we are still back below 30 there, so we're not out of the woods, but at least we're trending in the right direction there. If you look at the diamonds, remember this has been less bearish. It is back below 25 and it's positive. I'd like to get that positive indicator, or excuse me, on the negative indicator. I'd like to get the positive indicator above 25 though, but again, positive sign in that regard. Looking at the RSI and the CCI, we're back out of bearish territory. We're not in the upper half of the chart yet, but at least we're in bearish territory there. You can see the CCI is turning up too. Your Dow Jones Industrial Average, we are almost back above the midpoint of the chart. The CCI is above the midpoint of its chart, and you can see we're back above the 23% retracement level of this retracement as well. So good signs there. Looking at the Ichimoku cloud, your S&P is still in the cloud. It hasn't gotten back above the green and blue lines yet, which is kind of a sign. We are still at intermediate trend strength, below -2, above 65 down here. So we're still got that trend going. We're not out of the woods there. If you look at the diamonds, it is not. Like, we are back below 65, and we are above -2. So, and we were below the cloud. We're back into the cloud, so we can get back above the cloud. That'll be a very, very good sign. At least we're moving in that direction at the very least. Looking at the Bollinger Bands and the Keltner channels, we are no longer in the lowest quartile. We're not in the upper half yet, much less the upper quartile, but at least we're not in the lowest quartile anymore. And you can see the momentum here has turned yellow. The bars have turned yellow, so we do have the green. We're not below the lower Keltner channel anymore. So we're, again, early stages of things bouncing up to the upside. Your diamonds, you are in the upper half of the bandwidth. The bandwidth looks like it's peaked. And the momentum, you can see we've had a few days of it turning yellow and turning up. So we are definitely looking much better on the reversal for the Dow Jones Industrial Average. Looking at the VIX, you can see the VIX has had a nice good drop today too, dropping almost back below 15. Look at the VVIX. Not only did it drop below 90, it dropped almost below 80 today. So big time drop in the VVIX, which suggests there's more decline left to come on the VIX. So that's a good sign for the markets. You see the VIX crossing below its moving averages in the last couple of days, sessions here. So we are, working our way back down towards the kind of longer moving averages, getting back below the first stage, of course, is to get below the short ones. Then you start getting below the long ones, and things start heading back lower again. And it appears that's the case, that we're working in a bit back to a very favorable projection here. If you take a look at today's volume and range, not the best, but at least you had above average range and below average volume. Again, you start to see those start to drop off when you are back on the bullish trend. So we're not quite dropping off yet, but we're turning lower. So the more we can turn lower here, the better. Right, so get the ATR to drop back down. Again, this is relative to the price, so get the ATR over here to roll over and the volume to start to roll back down as well. Again, that would kind of confirm what we're seeing on this bullishness. I forgot to take a look at today's intraday range here. Again, we didn't get a new low. 2 more days of not getting a new low, so that sets us on our path. Once you get the red line below 70 and the green line back hitting 0, then we're set up for the bounce back up, right? That's kind of what we want to see, to get that bounce back up to 100 on the green line and work our way back towards 0 on the red. So we're really close to that happening. We don't have the highest price channel width there, but at least it's above 5%. So again, we had a higher high. We closed above yesterday's high. We're kind of moving into a gap of volume here, so we have a really good chance of getting back into the upper half of the chart, which, if you look at this chart here, would mean us getting back above the moving average and getting it back into bullish territory. So we're not out of bearish territory yet, but you can kind of see it looks good, right? It looks like we're improving there. And if you look at like the whole moving average, which is something we look at as well, we had been the daily whole closes have been below the average. This is our first day up above it. Good sign, right? We haven't flipped the parabolic SAR yet. Most likely we will. You can see you're crossing above the moving average there on the PPO. So again, these are all really positive signs for us to make a move back in the other direction. If you look at the diamonds, we have done that, right? So the hull has turned green. We have flipped the parabolic SAR down. We have crossed above. And it's a pretty decent size candle too. So a good opportunity for us to really kind of get going back up towards that 200-day hull moving average up there. All right, now let's take a look at what's driving this price action. And this is kind of the part that's not so bullish. So if we take a look first at what's kind of driving from an asset class standpoint today, we'll take a look at just today alone. You can see U.S. equities doing really well. IWM is up. Qs are up. Remember, the three-headed monster is higher commodities, higher dollar, and higher yields. So yields are pretty flat. Commodities were up, and the dollar was down. So really, there's only really one factor contributing to today's strength in equities, and that was the fact that the dollar pulled back, right? The dollar had been pretty darn strong. It's pulled back down below its 8-day moving average. MACD is got a red arrow on the MACD. Obviously, you don't have a red arrow yet on the stochastics for that matter, or on the moving average. So it's just a little pullback for now. But that's probably the biggest reason why we were so bullish. If you take a look, I don't know if it's still not showing here. Yeah, it's still not showing on this chart. So let's come back over here and take a look at TNX on this chart. Let's go here first. We'll come back to this in just a minute. Oops. That one's what I wanted. Okay, so we're still at 4.6%. We haven't closed below the 8-day moving average yet. The MACD is rolling over, and we're pulling down slightly on some of these charts. Looking at commodities, you can also see it's been bullish. It's pulling back. It did bounce back up off its moving average today, back above both the 8 and 17-day moving averages. MACD looking like it's got a chance to bounce back up, potentially above the 200-day moving average as well. So it might be a short-lived little pullback for all of these areas now, especially that crude oil and commodities are looking like they're starting to bounce off of new lows. If you take a look at the sector comparison chart and take a look at what's driving this price action today alone, you can see communication services, technology, and discretionary are up here, along with industrials and healthcare. Materials down here at the bottom, that will kind of drive our trade for today. But what's interesting about that rotation is, and I tweeted out about this earlier, is it is just a one-day move, and you notice the relative rotation graph, which kind of measures relative strength in these areas. Right now, the three biggest movers to the upside are staples, utilities, and healthcare. Technology and discretionary here in the lagging category, and communication services is in the weakening, moving down to the left. The materials you can see there, with its down day today, also really close to joining in that lagging category there. So that's not an area, and you can see energy still is an outlier way over here in terms of relative strength. So it's not necessarily, this chart does not say, hey, we are really shifting towards risk appetite right now. In fact, it's more, looks like we're shifting towards safety more than anything, despite the nice little bounce up that we've had. We did get a new breadth move to the upside. If you take a look at the number of stocks above their 200-day moving average, that's how close we are to getting back above the moving average already. And for that matter, being right back up to 400 already, remember, which is an extreme high point for that index. The number of stocks above the 50-day moving average, still well below its moving average. But hey, that's a good jump to the upside, one of our biggest moves that we've seen. This is the kind of move that starts new rallies. Like to be a little bit bigger, but considering that we weren't that low, so it's kind of like, are we just getting this kind of move? This is the kind of move we got last August that led to a new leg lower to the downside. So we'll kind of keep our eyes on that. The number of stocks forming new highs has turned positive above the moving average. Again, that's not very convincing yet, though, so we kind of need to see a little bit more action there. And the McClellan oscillator has gone from minus 100 to now positive in just a few days, which brings up that wide breadth thrust where we go from, that's the chart I had up, the Zweig breadth thrust, which is really bullish when you go from below 40% here to being above 61.5, which is way up here. We've had two in the past year, one coming off the banking crisis lows in March of 2023, so it's off the chart. And then this one right here, we went from below 40 to above 61.5 in 10 days, in 2 weeks. So a significant change in momentum. You can see the kind of intermediate run we had after that. Remember, we went 27% without even a 2% decline. So we have made a significant move. We were below 40 a few days ago. We are now 3 days into a move up to at least 51% now. So remember, we need to get to 61.5 or higher for that Zweig breadth thrust, in which typically produces like 20+% returns 12 months later when you get those. That's very rare. Even though we've had 2 in the past year, they're typically very rare. And so to have 3 in just a little over a year would be unbelievable in terms of how often we're getting these, especially considering this low point, which, like I said, washed out in some ways, didn't wash out in others, right? We, again, like the last intermediate decline, we never did get a black arrow, so we never did get 1.5 times the average volume. We did get above the 200-day moving average for the VIX, but we never did get above, which, we did barely there too. But we didn't get above 20 like we did here, right? And we didn't get above, 100%, much less 105%, which is what you typically do on intermediate declines. So, and we did, you saw we got above 100, but, if you go back, you can see when you're on intermediate declines, you tend to get a lot higher, like, up here in the kind of the 110, if not even higher than that, as we saw before we even hit into 2022. So we're really at some extreme lows on the VVIX here. Let me show you on this chart just so you can get some perspective on how much the VVIX can move. Go out to the 5-year chart. Let's go to a daily chart. So there's the VVIX. So you can see in 2021 it was really high and then started to come down after we had the correction in 2022. Some big jumps up into the 120s, but you can see when we have intermediate declines, it doesn't just go up to 100, right? It generally goes up a little bit more. So we're almost, we're just 2 points away from being back to extreme lows again, below 80 on the VVIX. So, it's not quite the breadth move that we want to see. It's not quite, the money flow move that you want to see here. There's our money flow. So we're back, I guess, to this level. Actually above that level, and you can see that's where my cursor is. That's where that line is. So you can see we're not back up on the volume. So we've had, multiple days compared to just 2, but it's not enough to offset the, the decline that we've seen. So we're still, having some issue. In fact, if you were to go all the way back out to like over here, the last time we were kind of at this area, we're not even close to being back up to that volume yet. So we're lacking in the breadth. We had some pretty decent breadth, but it hasn't been strong enough yet. We haven't had enough volume yet, so it needs to be more than just these 2 days. And the nice thing is, there's a good chance there will be, and I expect that there will be. I expect by the end of the week, we will start seeing some improvement in these areas. But we just haven't had there yet. So it keeps the door open that we can get a bear tag failure and a new leg lower to the downside. So we really need to digest how the next 2 days look, next 3 days for that matter look. And whether, how bullish we end up being, how bullish of a week we end up being, to see whether it can be a little bit more long lasting and not end up being a failure. All right, that brings us to our trade idea of the day. Let's take a look at, like I said, it was in that material sector. And part of the reason why it was so bearish is because of Nucor. Nucor came out with its earnings. It dropped down, 8%, almost 9% today. You can see well below its moving average, which hasn't even turned red yet. Here's Nucor. Actually has now. Tomorrow we'll have turned red. You can see they're turning red there. You got the bull tag a couple of days ago, obviously, right before the earnings. But now we're building on the bull tag. So you're going to have an intermediate decline here with a dark pink shading and a red line. We are the furthest below the moving average we have been all year, almost 10%. Big move, obviously. In fact, pretty rare for this to move this much on an earnings announcement. Nucor usually doesn't do this. It can move a lot, but usually fills in the gap after it moves. But this, you can look at the candle, pretty decent sized candle there down here at the bottom. Very decent sized candle. We got the red arrow, so you're below the moving average. If you look at the whole moving average, obviously on the daily chart, we've flipped the script to the downside. But if you look at the weekly chart, we already had yesterday or last week, and definitely have now. In fact, you're almost below, or you are below the 200-day haul there, and the size of the candle, again, pretty decently sized. So things are definitely moving in the wrong direction. Obviously, you have 3 red arrows. You are below the 50-day. You're not that far above the 200-day anymore, but right below the 200-day is sitting at a pretty strong support level, big volume node. So it's going to be hard to really break right there, right below the 170 level there. If you take a look at some of the other oscillators, obviously you're going to have bearish patterns across the board here. So you have well above 30 on the negative, below 20 on the positive. So your ADX is rising again. It was already pretty high to begin with. It's starting to rise again. Your RSI and your CCI have broke to new levels as well. Well below 30 on the RSI and below 200 on the CCI. In fact, if you look at the weekly CCI, that's how close you are to getting below minus 100, which starts these negative trends. If you look at the Ichimoku cloud, you are easily below the cloud now. The both lines there, you can see a negative rate of change. You have an intermediate trend strength immediately, right? We kind of skip the weak trend strength to intermediate strength trend, excuse me, there. And then you can see, obviously, you're going to be outside of both the lower Bollinger Band, way below the lower Bollinger Band. That bandwidth is now rising and will probably break through. We have been kind of stair-stepping down. We'll probably end up breaking through that and getting a new 150-day high, which, again, is another sign that you're starting to make a run to a new intermediate decline to the downside. You can see you got green dots. The bands themselves moved outside the Keltner channels. We are way below the Keltner channel there. So I wanted to be bearish. I wanted to be a little directionally bearish, but not too with that resist support there at 170 and not as much of a time frame here in May. So I decided just to go to the 170, sell that, buy the 172.5. That sets us up for this trade here. You can see it's a little bit more than, it's about a 2-to-1 reward to risk ratio, risking 400 to get a little bit more than 800. So a little bit more than 2-to-1 reward rate, but lots of flexibility and timing. So if we start to get like a dead cat bounce, we have some flexibility here to work with. And we don't have to break that support. We just have to get down towards that support and kind of finish the expiration cycle there, threatening, of course, if we get below it, then we're going to be at maximum gain pretty easy. And you can see since we did the Market Outlook Live, it's already up 50 some odd dollars. So we're already moving in the right direction just in the last 15 minutes of the, or I guess the last 30 minutes of the trading day. All right, that does it for today. You've heard from me. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forum. Open up any new thread with any questions or comments you have. Reply to anybody else's thread, and let's keep this conversation going in between videos. Again, thank you very much for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon. Comment on the video. Join us at marketscholars.com for free. Follow and like me on Twitter and Facebook as well. Have a great rest of your Wednesday night, everybody, or Tuesday night, everybody, and we'll see you all next time.